Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hi, listener. Welcome to Business Line's State of the Economy podcast on commodities. Today, we'll be looking at the prospects of gold. Currently, gold prices are ruling firm above $1,990 an ounce. It's near a 6-month high. Since the beginning of this year, there has been volatile trading in gold. Prices have hovered between $1,800 and $2,050 an ounce. While high interest rates have affected buying sentiments in gold, the geopolitical crisis in the form of the Ukraine war and the Hamas-Israel standoff have kept people interested in the yellow metal as a haven asset. Indications are that the high interest rates will stay until the first quarter of 2024, after which the central banks would begin lowering them. In India, RBI has been buying gold, and one factor helping the country is the depreciation of the rupee. How will gold prices behave from here on? What strategy should investors and buyers follow? What are the factors to watch out for? To give us some ideas of where gold is heading to, we have with us Mr. Manav Modi, Research Analyst, Currency and Commodities, Motilal Oswal Financial Services. Welcome to Business Line's State of the Economy podcast, Mr. Manav Modi. To start with, gold has been dabbling around $2,000 at least for some parts of this year, and now also it's looking at topping $2,000 an ounce. Where is actually gold headed over the next 1 to 3 months?
Right. Thank you. For this podcast, firstly, so as rightly mentioned, gold has definitely picked up its pace since the last few months. But just talking about this year specifically, we've seen wild swings. Both the extreme ends were tested for gold. If we see as close to $1,800 on the lower end, and currently we are at 2,000. But we've seen very close to lifetime high levels as well. During the mid of this particular year, so quite a wild swings we've seen. Currently, YTD gains are at around 11% or so. This was the case in the first 3 or 4 months as well, when we had the banking and debt crisis or concerns from the US that came in. So definitely a very good story has been picked up for gold. A lot of supportive measures have come in and changes have been seen for the safe haven metal. So I think I just talking about the levels perspective, I believe we coming to the fundamentals or the storyline in some time. But just talking about the way ahead or the pace ahead, I feel there are a couple of resistances from here on immediate basis. 2010 and the lifetime high 2075 odd levels are an important zone. Once we break above the same, I think we can look to 2150 and 2200 are the possible levels from the here end. But we have been quite conservative till now on the back of monetary policy changes that we've seen. So on domestic front as well, I think on an immediate basis, 63,000 is what we could look at as the first target, and 65,500 is what we can look at the second target. With respect to the rupee depreciation as well, I think buy on dips can be a good strategy from here on.
One of the reasons why gold seems to be gaining is because of the geopolitical crisis. But do you think that the economic slowdown is a sort of dampener? Not economic slowdown, but the high interest rates is a sort of dampener because people tend to be investing the debts and other things.
Right. So definitely, I think one of the primary reason why we were very conservative till now, or even still, we are not looking, we are maintaining that kind of a stance. Is one of the main reason is the real rates is still pretty high. If you see the tips or the 10-year real rates for the US, it is trading in the positive zones from quite some time, and is one of the primary factor for that inverse correlation that we've seen historical for gold and the real rates. As rightly mentioned, if the interest rates continue to stay higher, other asset classes might get more lucrative for an investment perspective. But I feel so there are other challenges as well when we go ahead in the course of this next year, because a lot of people are a lot of reports are talking about not only geopolitical tensions but as well as the debt related concerns that are currently on the rise. Growth is also one of the concerns that is picking up its pace. If we look at the Governor Powell's speech, during the Fed policy meeting in November, he did mention that inflation target are to be achieved of 2%, but also he mentioned concerns with respect to the financial stability. So if this trend continues, and we already have had one banking crisis in mid of 2023, if that continues, we could see some bit of a trouble for the economy, and that could support the prices on the lower end. However, definitely headwinds are certainly there. Like I mentioned, real rates is one. If inflation again starts to pick up its pace, we could once again see Fed could take that stance of rising or maintain a hawkish stance. But we still see growth and inflation balance will be a key factor to watch out for in the next particular year.
Do you think the current round of rate hikes is over? Maybe there is a pause, or the US Fed could contemplate lowering it a bit?
Definitely, sir. I think the rate hike kind of a cycle is from what it looks like. If we talk about the probability charts as well, which has been the main factor for the sentiment driver in this particular year, the probability charts also suggest that for December, almost 99% probability is being discounted for a pause in December. For a rate cut mid of next year is what the probability chart is suggesting, that we could see a rate cut. But I feel lowering of the rates is still a long due on the course. Maybe if we see couple of months of economic data, December or first quarter of 2024, if the economic numbers continue to dwindle down, that could initiate the talks for rate cuts. But I feel a pause for longer kind of a stance should be maintained from here on if the inflation continues to stay near that 3.5-3% kind of a zone.
You said on the India, on the rupee front, gold could touch as high as 65,500 or
Right, right.
66,000, right? But do you think that there could be problems in demand for gold, because this time the Kharif production seems to be lower, and we seem to be running into problems on the agriculture front due to El Nino?
Definitely, I think this time the weather forecast with respect to the rainfall has not been very positive with respect to the rural demand, which when we talk about, and that is one of the major drivers for the demand in especially domestic front. But I think, sir, that is one aspect. We already know that demand and supply are not the major or the primary drivers for gold. If we talk about internationally or on the domestic front, if we look at this year as well, I think gold import numbers have been quite positive. They are not that great with respect to the previous years, but we still have to receive official numbers from WGC definitely. But imports have been pretty substantial this year. Apart from that, I think globally central bank gold buying spree has been as on absolute roll. If we see this year as well, more than 800 tons is already what central banks have bought, and that includes RBI as well. So RBI has been continuously buying gold from past couple of years. I think after the pandemic, we have seen RBI continuously adding gold reserves, and so have been other countries. So this could and has been one of the major demand factor, so as to speak, for gold prices overall. I think one major factor is that ETF and speculators are a bit on the lower end. That demand has not picked up, but I think central bank gold buying is compensating for both these drivers as of now.
Also, there has been a depreciation of the Indian rupee. Now, what sort of impact will that have on gold?
So definitely, we have seen this year it's about 1.5% of depreciation is what we've seen till now. It's always been a strong correlation because if we don't see great returns on the COMEX front, on the international front, still on MCX we managed to stay on the positive side. That the trend that we've seen in the recent past, if the USD as a pair is rising, is increasing, that is if rupee is weakening, we could see prices gaining that momentum, and that is what we've seen this year as well. Even if when gold on COMEX was around $1,800 on the domestic front, because of the rupee depreciation, we did not see that great of an impact with respect to the prices. So I think this depreciation could continue. Dollar index is also trading a bit strong, that is supporting the overall dollar against its major crosses. So I think if USD INR currently is hovering around 83.3040 levels, if we see good breakout, and if we see a levels around 84 and a half, that is again a good upside supporting the gold prices on the lower levels on the domestic front.
And how do you see the prospects for silver?
Silver, I think we've maintained that stance from past 1 or 2 years that silver, could outperform gold, and definitely it's a high beta counter, but it has been, maintaining that trend. If we see in the previous year as well, on the COMEX, gold was, no profit, no loss kind of levels near about 0%, but silver on the COMEX did gain by about 1.5-2%. In this year as well, if we see YTD gains for the first 3 or 4 months for gold and silver, both were at around 11%. Then silver dipped to about 0% or a bit lower, and then now again it is at 6 or 7%. So momentum or the volatility is quite high, but I think a strong base for silver has been set. We could see a good spurt for silver prices from here on. So for silver also, we maintain that buy on dips kind of a strategy. We do see that 70,000, 68,000 on the domestic front is a strong base, while on the higher end, if we see a good break above 74,000 levels, we could see a good target of 77, 78,000 levels on the domestic front.
So what would be your suggestion to an investor in gold and silver and to a buyer of gold and silver?
So just to, give a bit of a brief on the factor specific, I feel central banks' monetary policy will be one of the primary factors to watch out for. I think once the officially Fed pivots from their current stance, they've already mentioned that they are data dependent. But I think if they continuously pause, even if they keep the rates here on, if they pause, that is a pivot for market participants. So that could support the prices. Central banks, gold buying spree, economic data weakening, are a few factors, especially geopolitical tensions. And we've seen black swan events, lot of events coming in from 2020. So pandemic, Russia Ukraine war, Israel Hamas, we've known this, but they've come all of a sudden. So any such event will be very beneficial for both these safe haven assets. For strategy perspective, I think any market participant who is on the short side should look to exit their positions, and anyone having a longer view or having a view to build a long position should accumulate at these levels. We could get significant dips. I'm not ignoring the fact that there could not be a dips there. We definitely will see those dips because we are already 11% on the YTD basis. So some bit of a steam off or a cool off will be required for the prices, but those dips could be used as an accumulation zone for a buying opportunity for the targets we've already mentioned.
Thank you very much, Manav. It's been real pleasure talking to you, and I hope listeners will take you from your views.
Same here, sir. Thank you so much.
Thank you.